Earlier this week, Brenthurst Wealth's founder and chief investment strategist Magnus Heystek wrote a story with a headline, "Property, a destroyer of wealth." It's had 58,000 people accessing it already, and that's only in a couple of days. We talk to the man himself in just a moment. Magnus, you know these numbers just roll off the tongue, but often I say a figure like 60,000. Imagine Ellis Park packed to capacity. That's how many people have actually read your story in the last 2 days. It's a big number, and clearly you've hit a spot that people are very interested in.
Well, thank you. Good morning, Alec, and thank you to everybody who read the article. And I had quite a lot of reaction directly to me, and one or two guys questioning my motives. Why do I write these negative articles? Because I say, well, these are facts. They're facts out there, and I don't think that the investment community is discussing them enough, because property, and I tell you what prompted this article. I had a client a couple of weeks back who came in and he said to me, well, I suppose, it's 1/3 cash, 1/3 property, 1/3 equity with you. I said, no. That old Met Board ad, you remember that old Met Board ad? Yeah. Those days are gone. The third asset class, property, has unfortunately undergone a very severe and substantial correction. And I proceeded to mention, Stanton City and Melrose Arch and those places, and even the Four Ways Mall, which is around my corner. And I say to him, there's been a massive, massive wealth destruction of those properties. He said it's not possible. Beautiful buildings and they're full of people. Must be a fantastic investment. Well, I showed him that if you take Shanton City, for example, which is part of the Liberty 2 Degrees portfolio, that's a lot of people invest in it via Liberty structures and endowments, and it was a fantastic investment until about 10 years ago. You got inflation plus 4% year after year for 20 to 30 years, and suddenly 10 years ago it started changing, and then very badly the last 5 years. You've actually lost 35% of your money had you invested in the Liberty 2 Degrees portfolio, which has got probably the top assets, the property assets in South Africa. And, he was astounded. He said, I didn't know that. And then we looked at his portfolio. He had 25% of his funds in property. So, these are the facts out there. And then we proceeded to talk about the valuation of Accelerate Properties Fund, which is just around the corner, Four Ways, and a lot of other properties, even in the Cape waterfront. I proceeded to tell him that the listed price of Accelerated Property Fund is down 90%, 90% since its peak just after it listed. And again, he couldn't believe that bricks and mortar can lose so much money. And of course, we started discussing why. I mean, there are purely financial reasons. The markets were overvalued. Interest rates kept on going up. I'll talk about the bond rates, which pushes up the cap rate of property. But it's more than that, unfortunately. And that's the danger. The fund managers will tell you, oh, hang on, it'll turn, it's looking good. But I'm saying one has to question that the macro environment in South Africa for property as an investment class and listed property, most parts of the country have changed so badly that it probably will never recover. I mean, because of the destruction of the municipalities, the misallocation of funds, the theft, the corruption. And, we now have almost on a daily basis the media discussing the collapse of our cities, Durban, Pietermaritzburg, Pretoria, and Johannesburg. I mean, it is now Financial Mail and other publications are openly saying it's falling apart. So, having said that, and investors are also paying the price in the sense that a very large percentage of their assets are losing value at a great speed, at an enormous speed.
I want to look at it in a little more detail in other parts of the country, but I think the overall thesis for property in South Africa has to be related to confidence in the country into the future. And I guess you are known as the perennial bear on South Africa, and it wouldn't be surprising for people that Magnus Heystek says, don't invest in something where you need confidence for South Africa into the future. Unfortunately for your critics, you have been right. And in fact, you've been avoiding this asset class for your clients, for the Brenthurst clients, for how long?
We maybe we were lucky, maybe we were smart, we will never know. But in 2017, we just looked at the valuations of most of the listed property stocks, and they were priced at a better rate than bonds. It was like it was a risk-free investment for the rest of your life. I think that we're trading at market caps of between 6.5%, which was unprecedented. And I must admit that there were some analysts calling this out and saying, this is too high. Trees do not grow to the sky. At some point, they stop growing. And we decided to start watching this, and we started reducing the allocation. And in 2017, 2018, we got out of it completely, much to the, improved fortunes of our clients. But there's a sting in this. This week I went and checked our own pension fund at Brenthurst, because we don't run pension funds ourselves. It was outsourced to another company. And I'm not going to name the company. I might do it one day. But lo and behold, we had 9% allocation to property in that particular fund where our staff members are invested. And I immediately fired them because I could not get a satisfactory answer. Why? That fund, it's an umbrella pension fund, it's got 9% allocation to property, whereas it's the worst asset class for the last 10 years, until I found out there's a link between the property management company and the investment company. And I think that could be happening quite a lot in the investment world. So I'm not naming it right now, but that is something that investors need to have a look at. And can have a look, how much of your money is in property, and is there a link between the company managing your pension fund and the property owning company? And in my case, can you believe it? That was the case. And we immediately fired them and transferred the money out. We started the process. But so I want people just to know what is going on in the property world. I can give you many other examples, Alec. 5-6 years ago, we had a very wealthy family who consulted with us with substantial property holdings in for instance, Bloemfontein. And we did an analysis, and we said, listen, the trend is going down, and we recommended them to sell and move the money elsewhere. And that person came back to me the other day, and he said, you know what, those properties that we sold, we could not get 50% of the value today. Thank you very much. Here's your bag of biltong kind of stuff. And that is happening countrywide. So a large portion of many ordinary savers, they're being affected very, very badly. I mean, I gave the example of Liberty 2 Degrees, which is a superbly run company. It's not a reflection on the company, it's the asset class. But it operates in a chaotic environment in Johannesburg and in other parts of the country. They can't control that. And the rates and taxes are escalating. It's become a cash cow for the ANC councillors. Whenever they need money, they say, let the rich big companies, they got money, let's go take it from them. Well, these actions have consequences, and we're seeing it now. There's very little new developments happening in Gauteng. In fact, I think it was on BizNews that reported new developments now larger in the Western Cape than in Gauteng. And that trend, I think, is going to stay that way for a very long time.
You mentioned
these things have big consequences.
You mentioned the Western Cape. There are property funds that have exclusively invested in the Western Cape, and it definitely has a far better record of governance than the rest of the country. You don't have the pillaging issues that you've identified and that the Zondo Commission has told us all about. Would those companies, and I think Spear is one of the...
Spearhead is the one that's primarily focused on the Western Cape, and it's done relatively better than the average listed property stock. But there are other factors too that influence, and that is, of course, disposable income, the working from home, and COVID hit everybody, and they were probably the ones to recover the quickest when the market does. There will be some kind of a recovery when markets get oversold, but essentially one has to question this asset class and get the message through to government that their actions are destroying wealth. And it's quite ironic that the Accelerate Property Fund, the chairman is Tito Mboweni, and an ANC stalwart, is very much aware of the values destruction that's taking place, within the company of which he is the chairman. I'm sure they discuss it. If you could get that message through to government that they are busy destroying wealth by hoovering up money wherever they can, not spending money, it's becoming, we kind of overused the statement or the expression closer to the edge, but I think in many parts we've gone over the edge. I mean, a CBD like Joburg will never recover. Never recover. It's just incredible what's happened there. We've seen what happened to Berea and Hillbrow. When you start mismanaging an entity like property and don't maintain it, it's destroyed. And that, unfortunately, is happening in many parts of our country.
Well, certainly if you ever walk around the CBD of Durban, you'll find that is a reflection of where other parts of the country could go towards. It's not a place that is safe anymore. But looking forward, what about Sandton? What about the pockets of... often I remember when we had a radio show which we broadcast from our offices at the time in Sandton, we called it the richest square mile in Africa. Has that title or description now fallen away?
It's rapidly falling away. The vacancy levels in Sandton, when I last checked, was about 25% on average. If you look at the A-grade buildings, they're standing empty. So there cannot be, in my view, a rental escalation in the next couple of years unless those spaces are filled up. Why would a tenant pay extra if they can get an empty building down the road and negotiate a great deal and negotiate very low rental? We run an office in Sandton, which wasn't very far from your old office in that area. We actually went to the landlord, and he was very kindly enough. We renegotiated our lease downwards by, I think, about 25%. Wow. And he was just too keen to take it because at least someone is there, and the place is paying our portion of rates and taxes. So I don't even think that the full effect has been felt. A lot of rental renegotiations only happen a year or two after the event, and they're all coming through now. So it is still an asset class that I cannot make a case out for reinvesting until we see some improvement in governments and everything that goes with running a city. I mean, Joburg again is now in shambles. We have a mayor that, goodness gracious, he has 1% of the vote. He was EFF. He's now a some Islamic party. He wants to rename Sandton Drive Leila Khaled Drive. I mean, this is lunatic stuff, but it's happening with our money. It's our money. It's our cities that they're destroying, but they don't see it.
Well, it is the early stages of coalitions, and we must expect turbulence. And we, I guess, have to only look forward and say this too shall pass. But you've spoken about offices. What about retail and industrial? Are they all in the same basket for you? Before we talk about what most people are interested in, I guess, is their own homes and their residential properties. But those other two investment classes.
Retail is under a lot of pressure. There might be turnover growth, but there's not profit growth. So retail still, and of course it was a consequence of massive overbuilding of capacity 10, 15 years ago. We always wondered, another shopping center, and we had one of the highest ratios or concentrations of shopping centers per capita in the world. And so there was oversupply. So retail is still something one would avoid. If you were smart in the property space, I think something like storage is probably the best bet. Predictable income, very low bad debts, because if you don't pay your storage space, they throw your stuff out, and you don't have to deal with tenants and court cases. It's very clear. If you don't pay it, it's out. So Storage SA, great company. Industrials, yes, that's also done relatively better. But if you still want to venture into into property, if you like that asset class for whatever reason, there are so much better operators around the world in Western Europe, in the United States. So again, we come to this: if I want this asset class, where should I go and buy this asset class? But for the time being, unfortunately, and I don't say it with malice or glee, the commercial or listed property market is still an asset class that I would be very, very careful to put money in.
And moving on to residential, onto homes. My wife is very keen to buy a house. Must I now say to her, anywhere in South Africa, not a good place to be investing?
If it's an emotional investment, which unfortunately homes is for a woman, a home is an emotional investment. Eric, let me now give you some marriage guidance here. Women buy with their heart, men buy with their head, and the two never shall meet in some cases. If you're saying, I want a pure rands and cents return on my money, the answer is no. If you say, I want to create a haven of some kind of homely family life and stability, women will buy a property for that reason. They will say, I don't care what the growth is. I want to plant my plants in my own garden. I want to redecorate and you say, well, that's fantastic, and go ahead and do that. But if you say to me, will I make money out of the property? Probably still for a couple of years in the Western Cape, you will make some money. And I think at some stage that wave of immigration will start cooling down. But at the moment, it is absolutely red hot. I cannot believe the prices that I see. I, as you know, have two very small apartments in Baldwin, and I'm talking small, tiny stuff. And the capital appreciation has been double anything else. It's just been phenomenal. So there are these pockets. Hermanus, probably the same experience. It's a wonderful place. Stellenbosch was an early starter. So the Western Cape, Paul, the Atlantic seaboard is recovering again. So there are still some pockets. But if you read, I think it was the new editor of Business Day, is it Parker? What's his name? I don't know. I can't remember.
Alex Parker, yeah.
Alex Parker. He wrote a piece about property prices in Cape Town, and he was lamenting on the high transaction costs of buying property, the transfer fees, and if you make the rates and taxes, and if you sell at a profit, CZT kicks in. And he was saying that is stifling the property industry. So yes, the taxes is a big number to watch out for in the property market. In the old days, you could make money by flipping, buying and selling, but those days are gone. But so if I can give you some advice, Alec, listen to your wife. Hermanus is a good place to put your roots down.
Most definitely that point that you make, and I think it's one that has been illustrated or emphasized many times by people like Piet Viljoen. Piet has told me, don't ever buy a property, rent, because then the owner of the property is the one who subsidizes your living in time. But there is the return on serenity and peace, which I guess cannot be ever measured in financial issues. Just the outlook, though, into the future. You've mentioned immigration. You've got a red-hot property market in the Western Cape. But as if you like, the rest of the country has increasing challenges, would that not suggest that the immigration wave, and last I spoke with Alan Windy, he said in 2021 there were 100,000 people who migrated to the Western Cape from elsewhere in South Africa. He hasn't got the final figure for 2022, or didn't when we last spoke, but he said it was more likely to be between 120,000 and 130,000 people. Those are big numbers and a big or fresh demand for residential property. So do you think that wave, and you did say it will cool down at some point in time, but if the incompetence continues in the governance elsewhere, why should it?
It is going to continue for a long way, because people are now seeing the late starters to the move to the Cape are now saying, geez, I can't afford the Western Cape. If I do want to go there in the next 3 or 5 years, for instance, during my retirement, I better buy something now. So there's preemptive buying. But the problem is people in Johannesburg and Pretoria and other cities in the north are battling to sell their properties. I spoke to a client this week who, by the way, he immigrated to Mauritius. And he went back to go and sell his 2 properties, and he lives in Bedfordview. And I WhatsApped him and said, how's it going, Nick? He says there are 840 properties in Bedfordview and on the market. 840. And, it's either he cuts his losses and takes a very cheap offer, or he hangs on, and that's a major dilemma. I can't advise him what's going to happen, but the market really, and the estate agents will tell you, in Johannesburg is extremely, extremely distressed. And I read something this morning of the Durban and Umhlanga market, which, according to estate agents, right now is worse than just after the riots in July of 21. So, I mean, it is really, really bad. I mean, it's a combination of low growth, low confidence. We've got, we've come through the COVID thing, and now we're hit with Eskom. I mean, the Eskom disaster is destroying wealth like you cannot believe it.
I guess on the other hand, and it certainly has been a trend in Gauteng, that people are moving more and more to secure estates. So if you've got a secure estate, you've got you're off the grid as far as Eskom's concerned, then your property will probably become in greater demand, because the old days of the big houses that were exposed to security risks, and if you don't have solar power, etc., then you really are skating a little close to the wind. So I suppose there are exceptions to every rule, Magnus, but generally speaking, it looks like this immigration wave is not something that is going to end soon.
No, I don't think so. I saw something on Twitter this week which broke down the sales of houses above 10 million, 20 million, or 30 million between Cape Town and Gauteng. And for instance, in the 20 million rand plus category, the sales in the Western Cape are like something like three times that of Gauteng. Nothing in Gauteng has sold above 30 for the last year or two, despite what everybody's saying. All these standards properties they're not selling. So the money, and remember, money is cowardly. It has fled to the Cape, and they are buying up what they can, whether it's Atlantic Seaboard, Constantia, or the Baldevie area. I mean, the whole Paarl area has exploded. Franschhoek, Stellenbosch, Hermanus, the prices there are just crazy. If you come down as a Gautenger with your meager budget and you say, yes, I have a 600 square meter home in Gauteng, I can only afford a 300 in Hermanus. That is the reality. You're in that bowl now. You're seeing what people pay for smart properties. There's a substantial premium for buying in the Cape there as opposed to Gauteng.
Interesting insights from Magnus Heystek, who is the investment strategist and founder of Brenthurst Wealth. I'm Alec Hogg from BizNews.com.